All right, traders out there, buckle up. Because today, we are diving deep into deglobalization.
Ooh, that's a big one.
It is, and we're going to figure out what it means for you.
You got it.
Specifically for people trading Forex and gold.
Right.
Because if the world is becoming less interconnected,
Less globalization.
yeah, that's going to have a huge impact on currency markets.
Oh, yeah, absolutely. And commodities.
And especially gold.
Especially gold.
Yeah. So we've got some fascinating sources to unpack today.
We do.
And basically, the main idea is that things are about to get a lot more volatile and uncertain.
Yeah. That's the takeaway here.
So if you're trading out there, you got to be ahead of the curve on this.
You do.
So let's start with the basics.
Okay.
What is deglobalization?
Well, simply put, it's the opposite of what we've been seeing for the past few decades.
Right.
It's the world becoming less interconnected economically.
Okay, so less trade between countries.
Less reliance on global supply chains.
More bringing things back home.
Exactly.
And so our sources are saying this is happening.
It is happening.
And it's happening now.
Yes, and it's going to continue to happen.
So why is this happening?
Well, there are a few reasons.
Okay.
You know, globalization, it's been praised for lifting millions out of poverty.
Right, especially in developing countries.
Absolutely. But it's also received a lot of criticism
Yeah.
for, things like rising inequality in developed countries,
Okay.
job displacement, even the rise of more extreme political ideologies.
Right, like a backlash.
Exactly. It's a backlash.
Interesting. So it's not just talk anymore. It's like countries are actually taking action
They are.
to become less reliant on global markets.
Exact.
Particularly when it comes to tech.
Especially tech.
So like bringing manufacturing back home.
Right.
Putting up tariffs to protect domestic industries.
Exactly.
So what does this all mean for our Forex and gold traders out there?
Well, first of all, we need to think about the economic consequences.
Okay.
Less free trade.
Right.
More tariffs.
Yeah.
That typically leads to slower economic growth because resources aren't being allocated as efficiently.
Okay. So less efficiency means slower growth.
Exactly.
And what does that mean for traders?
Well, it means you've got to be very careful about which markets you're investing in.
Right.
Some markets that were previously very attractive might become less so.
So like certain currencies might not be as strong as they used to be?
Right. And some currencies might actually benefit from this shift.
Oh, interesting. Okay.
So you've got to do your research.
Right.
You've got to understand which countries are going to be most affected by deglobalization.
Right. And how that's going to impact their currencies.
Exactly.
Okay, so that's economic growth.
Yeah.
What about inflation?
Ah, yes, inflation.
The sources mention that as a major consequence of these protectionist policies.
It is.
Like when you start putting up tariffs and bringing production back home,
Right.
things tend to get more expensive.
They do.
And when inflation rises,
What happened?
central banks typically raise interest rates.
That's right.
And that has a direct impact on traders,
Plus-
especially those who use leverage.
Because suddenly the cost of borrowing money to trade goes up.
Right. So your margins get squeezed.
Exactly.
You might even be forced to close trades prematurely.
Right. And it can also lead to increased market volatility.
Oh, how so?
Well, when interest rates are rising,
Okay.
investors tend to get a little bit jittery.
Nervous.
Nervous, yeah.
So they start moving their money around more.
Exactly. They're looking for safe havens.
Which brings us to the U.S. dollar.
Ah, yes.
The source predicts that the dollar is going to strengthen in this deglobalizing world.
It's counterintuitive, isn't it?
It is a little bit.
You'd think that with all this talk of protectionism
Right.
and bringing jobs back home,
Yeah.
the dollar would weaken.
But historically, that's not what happens
No.
in times of global uncertainty.
The dollar tends to become a safe haven currency.
Okay.
Investors flock to it.
They want stability.
They want safety.
So they buy dollars.
Exactly.
And that drives up the value of the dollar,
It
which of course has implications for all the other currencies you're trading.
absolutely.
So we've got slower economic growth. We've got rising inflation. We've got a strengthening dollar.
Sounds a bit bleak for traders, doesn't it?
It can be challenging.
But there's always gold.
Ah, yes. Gold, the classic safe haven asset.
Right when things get uncertain,
Gold tends to shine.
like in 2008,
the financial crisis.
gold prices surged
They did.
because investors were looking for a safe place to put their money.
Exactly.
So could we see a repeat of that in a deglobalizing world?
It's certainly possible.
Okay, so if you're a gold trader, this is something to keep an eye on.
Absolutely.
Now, the source specifically calls out the European Union's dilemma.
They are in a tough spot.
They are because they're a major trading bloc,
Right.
deeply integrated into the global economy.
Exactly.
So how are they reacting to this shift towards deglobalization?
Well, according to the source, they're looking at a few different strategies.
Okay.
One is interventionist policies to protect key industries. So like subsidies or tax breaks.
Exactly, things like that.
Okay.
Another strategy is diversifying their trade away from reliance on U.S. markets.
So finding new partners,
Exactly.
maybe strengthening ties with Asia or Africa.
Exactly.
And then there's the possibility of retaliatory tariffs. So if the U.S. puts up tariffs against European goods,
Europe might respond with tariffs of their own.
which could lead to a trade war,
It could.
which would be bad for everyone.
Not good.
So what does all of this mean for our traders out there?
Well, the bottom line is, you need to be prepared for increased volatility.
Okay.
Currency pairs could fluctuate more dramatically.
Right, because there are more unknowns.
Exactly.
So you've got to be really careful about your risk management.
Absolutely.
And you've also got to be very selective about which currencies you're trading.
Right.
You got to understand the specific impacts of deglobalization on individual countries.
Exactly.
And don't forget about gold.
Ah, yes, gold.
Gold could be a big winner in this deglobalizing world.
Especially if the dollar weakens.
Right, so keep an eye on that.
Absolutely.
And this leads to a really interesting question posed by the source. Can the EU, or any other entity for that matter, effectively advocate for a continued open trade in this new world?
That's the big question, isn't it?
It is.
Can we reverse this trend towards deglobalization?
Or are we headed for a future where regional blocs become more isolated and protectionist?
That's the million-dollar question.
And the answer to that question
Yeah,
is going to have a profound impact on trading strategies going forward.
absolutely.
So traders out there, do your research, stay informed, and remember, in a world where the rules of the game are changing, staying informed is more critical than ever.
Couldn't have said it better myself.
Yeah. All right, that's it for our deep dive today. Thanks for listening.
And good luck out there.
See you next time.